Hey guys, I trust you are all well and welcome to this week's live trading profits. I trust you've had a great 7 days since we were together on Wednesdays at the market with George. Now, next week is our international trading extravaganza, trading retreat taking place in Singapore. Unfortunately, due to COVID, most of the international senior traders can't trade, so I won't be there live, but I will be on throughout the week remotely, just as we are speaking now. But if you're in Singapore and you can make it to the live sessions, get out there, meet some of the traders, have fun. They really are awesome learning experiences, these trading retreats. I've been going there for, I don't know, over 10 years now. More than that. All right, guys, let's have a look at today's markets. We're in very interesting levels. I want to show you two that I'm particularly looking at the present moment. I'm looking to short. So what I have on the screen right now is German 30, top 30 companies in Germany. Now, some of your brokers, I've said before, will have the German 40 or the DAX, DAX, DAX 40 or DAX 30. It doesn't matter which your broker has got, same market flows. Now, I'm going to come back to this, just talk about some of the complexity in price action trading, which you can take away by being patient and waiting for your setups to come. Last week was really great. In the Wednesdays at the market, we were tracking a lot of charts, and then we just kept looking at gold. Took us virtually the whole day until the setup came up just before mid-afternoon. My time, I guess that would be about 8 p.m. Singapore or so. So if you took that trade, you'd have made yourself a nice 3-to-1 in that trade. So patience is a game. Sometimes setups are early, they're fast, and you just take them as they come up. So German 30, I'm looking to go short. Now, I'm going to show you, I've just put up another chart, because if I put this one on the daily, it's going to look a bit messy. So this is where we are on the daily. I'm going to go to a cleaner chart and show you what I'm talking about. But just pay attention to this descending trend line here. This descending trend line, bear trend line, right from the beginning of the year. I mean, this was, the high of it was the 5th of January. And that trend line has contained all the price action. So we are selling off, market is bouncing off that trend line. And every time the market gets to that trend line, if you've been tracking it, there are opportunities for you to sell. So I'm just going to pull it up here for now. Okay. So there you can clearly see how the trend line was formed in February. So you'd have had an opportunity to sell off here, and then of course the days that follow. If you had extrapolated that trend line, which you should do when you see a trend line like that, you would have come to March. You'd have seen this bull candle coming up. Okay, so forget about this blue line. That's a high of March. And having seen that and coming off a descending trend line, you ought to have been expecting a failure of sorts, okay, which if you had, you'd have managed to get into an early trade, one of those R2.3 trades that I speak about. You want to get into a reversal that may last 2 or 3 days, try and get into it early. So that would have been a fantastic opportunity for you. If you had missed that, no problem. Then next day you see it, you go and look for the sell trade, which would have occurred there. Now, after March, if you now anchored your trend line there, right in the middle of April, or towards the end, 21st of April, okay, you would have seen this lower high here at that point, which became the high of April, so you'd have marked that. But your descending trend line is coming down. So you would have seen this bull candle coming up, and this day here would have been a full bull candle day at some point. But if you had been watching that, you'd have been interested in this confluence level, the high of the month then, and this descending trend line. That would have given you a nice opportunity to get into our major trend reversal alert, one of the strategies that we trade. Sold off. No, of course, if you're working or if you're not watching the charts, if you've missed it, no problem. You'd have seen it, you'd have known the bears are strong, and the next day you would have jumped in. Now, extrapolate that again. Okay. So at that point, if we'd extrapolated that, you would have seen that a reversal failed breakout above that high, failed to test that trend line. And even if you had, well, if you had then carried on like where we are today, this is where we are presently. Now, let me go on a slightly cleaner chart. Okay, so that's a slightly cleaner chart. This is exactly where we are. This was yesterday, this is today. So having seen that yesterday, I didn't know it to be a full candle. So yesterday I was looking for ways to go short. So I've just anchored my horizontal line at the present high of May. Okay. And yesterday's candle, the goal for the bulls at least would be to try and create a new high. That's what the bulls would want. Break above this level. And, you know, if the bulls are strong, if they follow through, take out this level and just carry on. That is what the bulls would like to do still. But for the bears are seeing this descending trend line. You have very strong level. And at this point, the bulls put a close above it, which with yesterday's. I'm still looking for shorts because I'm saying, hang on, there is a level here that if the bulls accelerate above today, they have to take out that level. So we might have an attempt to get above that level. And if it fails, then we get a major trend reversal like we did here, okay, which you can trade. But obviously coming into the day, you start to look for opportunities to sell right from the onset of the day. Now, bear in mind this line. I'm gonna show you again just now this descending trend line. So I'm gonna go to the 5-minute time frame, and let's have a look at it. Okay, so there is a 5-minute time frame. That's exactly where we are. Okay. I've shifted something. Okay. I need to extrapolate this line. Sorry, I pulled it back. So let's extrapolate that line. Okay, so we extrapolate our trend line. All right. There is the trend line, the descending trend line. Okay, there it is there. So yesterday, the bulls tried several times to break above that, and the bears defended it. So I was looking for shorts in this particular area. Took a couple of shorts, you know, didn't make a ton of money. Market reversed, and when the market came back here, strength by the bulls, you can see bull breakout. So then you gotta wait a little bit. Eventually, the bulls managed to put a measured move right up to the end of the day. So this descending trend line, level of resistance, bounce, 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 and then level of support. And again, the bears just before the close managed to push market down, but the bulls came back and we closed above it. But it's still a strong, significant level to look at. Because we broke above it, just on this couple of days, it's become a level of support here. Tried to break beneath it, the bears failed, tried to break beneath and failed. So there's a lot of fighting, if you like, taking place here. I'm still looking to go short. Now, if you're gonna go short, You need to have absolute clarity. So the whole case, the whole thesis, if you like, for the bears is that bears are strong enough. They are going to defend that trend line. They've done so since January. We've poked above it a couple of times and there's been reversals. So today it is possible that we will still get a reversal beneath. But now the point is, where do you jump in? So if you had been in the market right from the open, which is possible for guys trading on the Asian side of the map, you'd have been up and about. But have a look at the first candle. Always look at the first candle, break above the high of yesterday. Okay, so good for the bulls, but then followed by a doji, by a trading range. Why? You could ask yourself the question. Something wrong with the bull case. So right from there, you can see the bulls are weak. Then the market sold off. Now, when the market sells off like that, you are looking for a pullback to trade. Okay, you're now in the middle of a trading range. If you convince yourself to trade in the middle of a trading range, which you can do, but you need a wide stop. It's a 50-50 trade because you're in the middle of this forming trading range. Best is to wait, get the market to give you a lower high, test that level and look to trade. So very hard to get in at that trade. But if you want to scalp, every time you see a bear candle, you jump in, you put your stop up there. Why don't I want to do that? Because the goal, if we talk about goals for a split second, the goal for trade in the markets, at least for me, and I've said this before, is not just to get very good. Because if you're very good as a trader, well, you double your investment every year, which is exceptional. Okay, very few companies do that. Count them on your hand. No bank is going to give you 100% on your money every year. If you like your US dollars, if you're lucky, get 2%, okay, in the year. So if you get very good as a trader and you can bank 6% growth on your money every month, month on month, that's not difficult to do. You double your money every year. That's very good. But for me, that's not the goal. We can get that good. You've got to have a bigger goal. The whole goal is when you come in, my mindset is to extract my wealth from the financial markets. Okay, and what guys want to do in a month, I want to do in a day, I want to do in a session, I want to do in a few hours. I have some big goals. I want to double my investment on a daily basis. Why not? If we know what to do, it's possible to do that. But you're not going to do that by taking a trade at the middle of a trading range and putting your stop there, because your goal is to get down here. And if you're lucky, get 1-to-1. I mean, that's a lot of hard work. It's better for you to wait, get the setup, put a stop, and then, put a small stop, reasonable stop at a technical level, and then sell all the way down and make the 6% in one session, in one trade. I mean, that gold trade was 3-to-1, 3%. If you risk 1% on your trade, if you risk 2%, it's 6%, boom, on one trade. But you got to wait for them, right? That's why you patiently just wait. So what does waiting mean? So for me, on this, because I'm looking to go short, okay, I'm either going to go short up here at a test of yesterday's high. Okay, so that lower high is pretty key for me. Okay, the first key lower high of the day, from there to there, that's key. So when that formed, at that point in time, I said, no, hang on a second, we might just get a double top here. Okay, so if this huge reversal here occurred here, that for me would have been, okay, a double top. So first high, second high, double top. Then after that, I just want to wait for a lower high, or it might still be a higher high, a third touch, 1, 2, 3. Then I take that trade. But we didn't get that. So when that materialized, kind of said to myself, well, hang on a second, if the bears are strong, they're selling and able to give us a candle that big, maybe they can give us a second candle. Okay, if they give us a second candle of that magnitude, then that candle would break beneath all of these lows. Okay, so this was the present low. This was the low of the day at that point when that was forming. Would have broken beneath that, even broken beneath this higher low from yesterday, and closed down here. Then we say, hey, the bears have taken control of the market. And if they've done that, with that candle breaking beneath that low, all we would need is just one other smaller candle. Remember, a breakout is only successful if you have the breakout candle and a follow-through candle. Follow-through candle doesn't have to be of the same scale as long as it's a trend candle. So that would have been fantastic. If that had occurred, then we know that our sloping trend line from January would now become resistance, and we just wait for a test of that sloping line and sell off. But as it turned out, we did not get that. First, the market formed a trading range. Okay, after that low, whenever I see a trading range, you expect a breakout beneath the trading range to a measured move. So I had a measured move of that trading range drawn here. Okay, so as this was forming, before all of this formed, so hang on, if the bears break beneath this, they want to get to a measured move, and that would only test that low. So the bears are not strong enough. Why are we going sideways when they should be breaking beneath to a new level? With that break above, which failed break, and when the market turned, it got to a perfect measured move, but not anymore. So as far as the bears were concerned, they achieved their little objective of getting that measured move, which still does not give us a chance to jump in and sell. Okay, so there's still our descending trend line. We're failing to break beneath it. We're failing to break beneath the low of the day. Okay, breakout, pullback at this present moment. At that moment, we had this trend line was here. Okay, I wonder whether we would get a wedge. If it 1, 2, if the bears were strong, maybe they would have tested that to give us a 3 push, but that did not happen as well. So the bears didn't get to that objective. Pulled back into the trading range. Bears attempted again to break beneath the new low of the day, which was there at that point, and failed. Okay, and when the market turned, I then pulled this line up here. It's now a whole bunch of factors here. That low, broken beneath it. Market went down here, came back again. Right at this low, we turned. Okay. Remember, we had a measured move of that trading range here. So a lot of support building up here. That low itself, that 3 push pattern, confluence of support factors, meaning what? The bulls are defending this breakout strong. The bulls don't want the bears to break out beneath this level. Because if the bears break out beneath this level and pull back, this market is going to crash. You can read in the news tomorrow, the German top companies crashed. We will have seen it on the charts and would have made a ton of money out of it. Okay, that's what we're trying to catch here. But the bulls are defending it. Okay, so you might ask, okay, George, if the bulls are defending it, why are we not buying? Well, have a look at it. Where is there to buy? Okay, so that's nicely defended, but look at the reversal candle, bear candle. We don't buy above a bear candle. The market accelerates back to test the low of that trading range. The bears again try to resume it, but again, we're failing to get a decent entry for the bulls, which is bad for the bulls, but good for the bears, because the bulls are not able to create a clear double bottom and buy and accelerate the market. So the bear case is still strong. Okay, so I left all these on the chart for you. So if you're following this later on in the office or at home, you can put them in on your own chart, or just get back to the video and watch it again, because it's really quite insightful. Now, if we're looking to go long, and here's the point of this. So just assume, allow yourself to think for a moment. If we're looking to go long, if all of this price action was taking place above the high of yesterday. So the green line is above is the high of yesterday. Our magenta is the open of the day. So this was taking place up here, and we're looking for a test of the high of yesterday to buy. And we saw this. That would be a perfect test. That would be showing that the bulls are defending this level. Then we just wait for a clear double bottom for us to buy. Okay, but that's not happening there. That's happening where we're looking to sell. So we gotta wait. We just have to wait. Now, this is good for us because a channel has been formed here. You can create a channel from there if you want. There's a channel breaking out from a trading range. That is a fantastic price action pattern we look for, because if it carries on and gets to this level or that level and gives us a reversal candle, then we just jump in and sell. Okay, so our sell zone, where we want to be selling, just want to mark this. Okay, so you don't have to keep all of these lines on your chart. Okay, it's clutter. This is for illustration purposes. I'll take these off once we're done with the session. Okay, so you know, this channel that's been created is fine. You know, you can see all the lows. Actually do that. Tighter channel. Okay, as long as it carries on as a channel, two-sided price action, and if we get up here and get a reversal candle, or up here and get a reversal candle, then we just have to take a trade. So if you're tracking this later on, just keep a note of that. That's your sell zone. That's where you want to be selling. So somewhere within there. Okay, it will set up for you. Okay, it will be, or if it sets up, might get at this level here. So just for illustration, we do this for you. So I like to call this 2-1 because I'm looking for the third touch, right? 3 pushes up. First attempt, second attempt, third attempt, I'm going to be trading. So if we get anywhere in here and the market turns, that is 2-2, that's perfect. Then you just need within 1 to 3 candles, you need your entry, which could be a lower high, or it might just give you a third entry. So 3 could be there or there. Okay. So 3. So let's say you get a double top here. 3, the market might accelerate and trying to break up and give you a decent reversal. Or 3 could be a lower high. Okay, so if that sets up for us in the vicinity, then you must take it. At this stage, your stop has got to be up here, just above the high of yesterday. Don't bother putting a tight stop because market might just bounce around a bit. You don't want to get stopped out. It's very frustrating. If you tighten your stop too early and get stopped out, then you sit back while you're agonizing and asking yourself, why did I have to tighten my stop? The market goes in your direction and then, you feel even worse. So don't tighten your stop early. Put it in the correct place. When you have a couple of candles down here, pull back, then you can tighten your stop. So I'm going to leave that as what it is. Dark steady, looking to short in that vicinity. Now, I want to look at another one I'm looking to short, but which is Hang Seng 50. But before I do that, let me just show you some of the other markets and where I am looking to trade. Okay, so what I have here now is euro versus the dollar. Broad channel from February, broad bear channel from February. Now, at some point, if the market ever gets to this trend line here, this bear trend line, I'm going to be looking to short. Okay, that's going to be my whole thesis going into the market. I'm going to be looking to sell short, going up, bounce off, and sell. That will be a reversal trade, which like this, that's a reversal trade. Okay, because it's coming up to a reversal point. Here was interesting. We had market going up once, twice, so there was an extension of a wedge there. We also had this horizontal line, one, failed breakup, two, and failed breakout there. So decent enough reversal that we had there. We also had the low of 2021. So there, although market was going up before, you'd be looking to short reversal trade, 40% of success. The other 60% can be a trading range, which means you don't lose money, you can manage it, or you might get stopped out. But if you get in there, make some money there, make some money there, make some money, keep selling. Okay. Same thing here, fail breakout, double top. So if the market gets here, I want to sell. Right. But now look at much closer time frame. We have another tighter bear trend line in here. That high, which was in March, this lower high here in April, and then it's still descending. Now, looking at this, I'm saying to myself, hang on a second. There's key levels of resistance here, which may be very interesting to jump in and short. So as far as euro is concerned, I would rather wait to see if we get any bull acceleration to test this level. Okay, you see that doji is there, so that's a trading range, inside pattern, trading range. That might be testing that level. But also we have this descending trend line. I want to see if the bears are strong enough to defend that trend line. Okay, and if the bears are strong enough to defend that trend line, I'll get my trade to sell. Okay, there's also the 20 EMA. Okay, and we tried to break above it here and failed. So I want to see if this 20 here will be a level of resistance or this level here. And the outermost level is this, which is the present high of May. So I am looking to short on the euro, but I'm going to wait. I'd rather wait to see my short setups or my buy setups before they materialize on the daily at levels of support and resistance, and then drill down to the 5-minute time frame and pick up those trades. That's the general approach. That's why I spend a lot of time looking at these daily time frames, and I have this, I call it the fractal matrix analysis, because markets are fractal. Patterns that you see on the daily repeat themselves on every time frame. So I want to jump in, I want to see them on the daily. So I want to avoid just opening my charts, jumping in and saying, okay, what do I see? Because you will see opportunities and trade. But as I said, I'm really not interested in the 6% a month WE money every year. I want that in a day kind of stuff. which means I have to wait. The market will get there. I mean, if you were in April, let's assume you didn't pick all of this up, and you came into the market here and did your analysis, you would have trading range, you'd have waited 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12th day. On the 12th day, that's 2 weeks, you'd have been saying to your friends, I'm waiting to sell the euro, I'm waiting to sell the euro. You'll be saying, why are you waiting? The market is moving. Well, I'm waiting for the market to get to the level that I want. And if you had picked that up, they've made a ton of cash there. Even if you had missed that, wondering whether it would happen. But once you've seen that, you say, okay, that's where my first trade has been. Now I'm selling. You'd have had 1, 2, 3, 4, 5 days of selling. Okay. And even if you just picked up a couple of trades there, this would have been a huge reward for you just by patiently waiting. Okay. So we are slap bang almost in the just middle of the month. It's worth the wait. It's worth the wait. So that's where I'm waiting for euro. Now, Aussie 200, I'm not going to analyze, but I'm going to talk to you about that because that's quite interesting. Now, you've been tracking me for, it's a long time now, almost 2 years, guys. But, we had Nikkei 225, the 8 markets, top 225 companies in Japan. That's been one of the markets that we've been trading. But there's just been some technical challenges with the market. Now, I'll tell you what it is. I've seen it, I've experienced it a few times. Yesterday was another one of those. With the calculator that we use for the indexes, and I told you guys about it, Cashback Forex, that's where the calculator is. When you trade in any other index, I know that whatever lot size is that the calculator gives me, I just need to divide them by 10 to get the correct lot size for my quantities. Now, with the Nikkei 225 and the way they convert the yen and all the stuff that they do there, calculator is perfectly fine, but sometimes you have to divide the lots you are given. So if it says to you, for your X percentage, this stop, you trade 200 lots, don't go and put 200, you have to divide by 10, put 20. But then sometimes, depending on the times, I don't know how the machinery works, it says to you, oh, you can trade 2,000 lots. And I look at it and say, there's no ways I can trade 2,000 lots or even 200 if I divide by 10. Then you're going to go and divide by 20 and you put the trade in, and it's not the full 1%, it's 0.7%. And you have to put on multiple trades. So, I mean, yesterday, it's some good trades, good setups. But by the time I've done all the work, I'm saying, man, this is just such a bugger because of the way this thing is structured. So I had a chat with, I've had a chat with my broker before. I mean, they cap the lots that you can trade, which is fine. They just put double. But then the computation and the changes, it just becomes a mess. Now, the Nikkei 225 also mirrors, for those of you who look at it, mirrors pretty closely the S&P 500. If you put it on trade in view and correlate the markets, you see how they mirror each other quite closely, which is great because, I always choose, do I trade Nikkei 225 or do I trade S&P 500? I found the chart patterns on Nikkei 225 a little bit cleaner, but this whole problem with lot sizing is problematic. Sometimes I don't have time to be worrying about what the calculation says. I just want to execute the trades. So I had to make a decision, and looking at my charts, it was pretty simple. I wanted to make sure that I still trade markets that give me some reflection of what's happening in the Japanese market. So between the Aussie 200, which I've put up now instead of the Nikkei 225, the Hang Seng 50, top 50 in the Hong Kong Stock Exchange, and the S&P 500 itself, I'm pretty comfortable I have a fair reflection of the Japanese economy. So going forward, the Aussie 200, top 200 in Australia is on the charts. So I've just started looking at it. I haven't completed the full analysis, but if you're going to add it onto your charts, so the usual basics, all-time high, all-time low. I'm going to put the midpoint just now. So this is fresh. Then of interest in terms of where we are today, there is that low. Okay, there is also the midpoint. You can see it now. This is low of 2021. There is a midpoint of 2021, exactly where we're at. There is low of April. So key levels of resistance that we're looking at. Okay, here we got midpoint of the 2022 range. So here 2022. That's present where we're at. Low of April 2022. And there is a high of yesterday. So we'll talk a lot more about that as we go forward. Okay, just quick go through Bitcoin, doing nothing about Bitcoin until I get to this upper range or lower range. It's going sideways, so no need to jump into that at the moment. UK 100, descending trend line, key level of resistance right here. So I'm looking to sell, but I'm going to look to sell when the market gets here. See if we get a bounce off this particular level. And this would be the measured move. So today if the bulls come in, the measured move of today's range is up here, which would be fantastic because that would be a test of that high. So I'm looking to sell in this zone for UK 100, but I'm going to wait for that. German that we spoke about, S&P 500 is where I'm looking to sell, either off this descending trend line, tight channel, okay, bounce off the breakout point, that low. So I'm looking to sell. And what I do with the S&P 500, have a quick look at it. If it's anywhere near what I'm looking to be looking at today, I drill into it. Otherwise, I wait for the US markets to open. And they open 1:30 GMT, okay? 1:30 GMT, that's when the US markets opens. The New York Stock Exchange opens an hour later, so huge volumes coming into the market. So that's when I'll drill down and have a look at it. But I'm looking to sell. Why am I looking to sell? Because of the level of resistance here, the descending trend line, which was created by this high and that lower high. Now have a look at here, second touch of this descending trend line. Okay, market went up once, twice, three times. So there's a ledge here and then a micro double top. Okay, bouncing off the 20 EMA at that level. Strong sell-off by the bears. So this is what I'm waiting for. Although it was a bull candle the day before, looking at that level, you'd have seen that level, you'd have seen that 20 EMA, you'd have been looking to sell. Okay, so that's what I'm looking at here, looking to sell and hoping to get something like this. Now I'll be able to get in early. So I'll drill down into that when the US markets come. Gold, tight trading range, tight trading channel, bear channel, sloping downwards. Nothing to do in the middle of this channel. Look to sell off the 10 EMA. 10 EMA is in a level of resistance all along. Look to sell off the 10 EMA. And maybe off the trend line. That's what I'm looking for. If we accelerate down, look at all these tails, look to buy down here. So gold, let's wait. Finally, in the time that we have, Hang Seng 50, looking to sell. Looking very good, looking very good. So key high so far. Okay, that's a high of the day. Market trend here. Opening candle of the day was a doji. Bear candle, bears control it, but tails on top. And if you're in the market, you'd have seen the market get into a measured move and then turning. So at this point, measured move up, failed breakout, but we need to wait for our second entry short. Okay, so key high 1, that's 2-1, that's 2-2. So anything happening at this level will just be an extension of 2. I need a 3, either a touch here or a lower high, and then we look to trade. So I am looking to sell, but it's close. So just gonna wait for the market to get there. Now, why am I looking to sell? Hang Seng 50, look at the daily chart, bit of a mess, but keep this descending trend line. Okay, bear trend line. Let's contain the market. Okay, so that low, you could have extended all the way back there. It still would have been something. That low. And when you draw in a channel, of course, you got the descending highs, and then you just anchor it to this low. So the ultimate objective of the bears is to get down here. Okay, is it possible? Of course it's possible, because when you're here, you never would have thought the market would get down here. Okay, but all we did was a measured move. Okay, market got to the measured move, broke and pulled back. So as far as the bears are concerned, they said, well, we can see all of that. We'll sell when you get here, we'll accelerate down and just aim for a measured move, which is down here. Okay, so it is possible for the market to get down here. Okay, we might sell off, buy, sell off, buy. So for 5-minute traders, we'll have opportunities to trade it up and down. Now, very quickly, I want to show you. It's a bit messy here, but bear that in mind. I put up another chart here for us, Hang Seng 50. That's the trend line that I'm talking about. Okay, you could extrapolate all the way back there. Okay, and this is where we're at. So I am looking to sell here. Now, what could happen? If you just look to the beginning of the month, okay, we had almost a similar pattern. A doji here. So today might just end up as a perfect doji. Who knows? If it does not change our whole thesis for selling, right? Look at what happened the next day. Market tried to accelerate and bounced off this trend line, coming from way up there. And you would have sold off beautifully the whole day and follow through. So worthwhile waiting. We might get it today. Market might accelerate up here and turn. If not, we wait for tomorrow and see if bears defend this trend line. If they do, worthwhile to trade that. All right, guys. So that's where I am at the present moment. Just want to check if there are any questions. There's no questions there. And we've just come smack bang to the end of our time. So Marlon, thank you very much, buddy. I appreciate it. We will catch up with guys next week. There is no show. There is no live trading profits. We're in the trading retreat the whole week. So there's a lot more price action Monday to Thursday. I'll be in. All right, guys, take care. We will see you next week. Have a good time. Appreciate it.